Thank you, Christina. First off, thank you, Stuart, and the people from Vertical Events for organising another fantastic conference, and I'm pleased to be here in the Gold Coast. So, our standard disclaimer, but Magmatic Resources, we've got 6 projects. They're in 2 of Australia's most popular and resourceful resource areas, West Coast Yamana, where the 6 million ounce recent gold discovery gold mine's being built by Gruyere. And our founding projects are in the East Coast and the East Lachlan. So what we offer is a pre-discovery investment, opportunity to get into a de-risked portfolio in a buoyant time of copper, gold, nickel, cobalt and other commodities. So our short-term upturn is we are very much focused as a junior explorer on our 4 advanced near-surface gold projects. Now they have potential for open pit mining, and they're the things that we can get fastest to a resource, which is where you actually get your major uptick in your share pricing. And we talk about the 4 projects that we've got there. They are advanced, so we're able to talk about targets. So we've got some small ones that we can advance quickly. Badangara is an historical gold mine, high grade, 230,000 ounces, and we're targeting 250,000 ounces. And we've got some potential toll treatment, meaning that it's potential we could actually take those to a nearby gold mine, which is only 50 kilometres away. Boxdale Carlo Reefs, 14 kilometre gold trend. Lady Ilsa, 10 kilometre gold trend. We only just drilled that, we identified that, and the target there is 1 to 2 million ounces of gold and 1 to 2 million ounces of copper. McGregor's had a release last month. This is a joint venture we've got with the Japanese government, 100,000 to 200,000 ounce near surface gold target. The big upside is that we inherited our projects, 4 projects from Goldfields, the 7th largest gold miner in the world. And those projects have copper gold porphyry. And copper gold porphyry are monsters. And we're in the East Lachlan, and East Lachlan is the only place in Australia. There's only 2 copper gold porphyry mines in Australia, and they're both in the East Lachlan. They're too big for us openly. But we've advanced some of them, and our way of creating value and advancing these projects is to joint venture. And we've already successfully joint ventured one with the Japanese government. We're going into our 2nd year in that joint venture, and we'll put $1 million in the ground for that project. So, this is an investor conference, and I'm going to enjoy talking to you more than I enjoy the other conferences, because I'm normally talking to geologists, mining engineers and brokers who know a lot more about the resource industry than I do. I come from working overseas globally for some big companies that Christina just mentioned, but for the last 10 years I was a venture capitalist, and we could talk more about that. But 5 years ago I was approached by Goldfields at the time when the big boys were getting out of greenfield projects and focusing on brownfield and buying undervalued assets. They had 7 projects in Western Australia, in Australia, 7 greenfield projects, and they wanted to sell them. They asked me to help them divest them. And through that divestment process, I said, listen, you really love these projects. Why don't we pick the eyes out of the 7 projects? And we set up Magmatic Resources, and we've now got 4 projects, and Goldfields owns 20% of our company. I kept it private for 4 years, and we listed last year in May, but we have a wonderful cornerstone investor in Goldfields. So when I'm, as an investor, looking at, well, geez, how do you value a gold mine? How do you value an explorer? How do you value a tenement? Well, the 7th largest gold miner found them, spent $13.5 million on them. It's in a tier 1 country, so we all know about sovereign risk at the moment, and Australia doesn't have any. The projects are in Australia's largest copper gold porphyry region. It's home to Australia's largest gold mine, Cadia, 100 million ounce gold equivalent. North Parks, owned by China, Molybdenum and Sumitomo, and the Cal mine, owned by Evolution, 8 million ounces. And our projects are all on the same the geological trends as those projects. So it's de-risked. I looked at it, it was de-risked, 4 projects, 8 tenements, multiple gold, polymetallic, copper, and so we're just not relying upon that glory hole. So when I looked at this as a counter-cyclical investment and saying, okay, we believe in copper and gold was going to go ahead, so how did we base that upon? So copper is currently in a supply deficit. And here's some sort of brief numbers. But the drivers of that are the US economy is growing, the infrastructure investment that Trump's spoken about still haven't hit. China's economies continue to grow, and it hasn't even really started to benefit from the One Belt, One Road directive. That's just going to need an enormous amount of copper. There's rising demand from the electrical vehicle area that we spoke about. And an electrical vehicle on average uses about 4 times more copper than a conventional car. And the renewable energy uses about 9 times more copper than conventional energy. The challenges are that the copper gold mines around the world aren't sticking out of the ground anymore, and the miners have actually already sort of mined the high-grade ore, so the production and the mining costs are getting higher, discoveries are getting more difficult, and there's been a lack of investment in the whole process from greenfield through to manufacturing to mining, all the way along the value chain over the last 10 years. Labour disruptions. Chile now, the home of copper, is the highest cost country in the world to produce copper because of the cost of water, electricity and rising labour costs. So there's from McKinsey's Global Institute, there's a chart that shows that it's looking for, and you can look, there's lots of different charts that produce different things, but this is one that shows and predicts that copper will be in a supply deficit for the next 2 decades. Why porphyry copper? So porphyry copper mines provide between 50 and 60% of the world's supply of copper. Their nature is they're massive projects, they're low grade, typically above 0.2% copper, above 0.2% gold. The major mines, you know about Grasberg, the largest gold mine in the world, is in Indonesia. Indonesian government forced Freeport McMahon last year to reduce their equity stake from 91% to 49%, so pretty strong political risk. Chile, world's largest open pit gold mine, I won't pronounce that. Escondida, BHP, Rio, major shareholders, the largest copper mine. So these are all porphyries, and so we're in the area, we've got the only 2 porphyries, and the East Lachlan is known as being underexplored. So we are waiting for a couple of elephants to be found. Our 3 porphyry projects are in this area. So the majors are coming. The red parts are our 4 projects. And the East Lachlan has got 2 geological belts. This is called Molong, this is called Junee Narromine. That's the huge Katy deposit, and we're North Strike. That's the North Parkes porphyry mine. We have joint ventures with the Japanese there, and we have our major project up here. And this is Moorfield. So here's Evolution, here's Sandfire, here's China Molly, here's Alkane, here's Anglo Gold. Fortescue have opened. Fortescue's looking for copper. They've opened an office and bought projects in Orange, which is the home of our area, and of course Newcrest. And McPhillamys, 2.2 million ounce resource, Regis is going ahead with that mine. So this is really picking up. So why? This is called ZIF distribution. It's a predictive measure of how much resources are going to be in an area. But when you talk about the Yilgarn, which is most of West Australia, the home of gold, that in 73 there was 42 million ounces of predicted endowment. 35 years later, the predicted had jumped to 324 million. And it's continued to grow. And last year, currently at the moment, we're building a 6 million ounce mine at Gruyere. The 2 belts that we have, and you can see the predictive analogy, that's where it was, and these are the prediction of deposits, and it was pretty good. You can see all these deposits along here. So up here, here's the Molong, and so through this same predictive analysis, it's saying that there's 3 deposits waiting to be found from 8 to 13 million ounces of gold, and down on the Junee Narromine, there's 4 from 1.3 to 3 million ounces. So it's the right place to be in. And a little bit more visual, this is the Yilgarn in 1973, the big dot's 5 million ounces, the little dot's 2 to 5. 30 years later, that was the same, little dot became a big dot, and there was a lot more big dots, and that's currently. 30 years ago in East Lachlan, nothing. 30 years on, it's exactly the same picture. and that's where we are now. So we're basically saying the East Lachlan's about 35 years behind the Yilgarn. The Yilgarn advanced so quickly because it was near surface. But there's not many near surface deposits to be found anymore in the world, and so we actually have a lot of people coming. So this is the Cadia discovery. Basically what I'm saying, it started in 91. The intercepts that they got all the way along weren't too exciting. 102 metres, 0.13 gold, 0.4 copper, but then the next year they had a discovery hole, and now that's become 100 million ounces. We're about to show you the 4 projects that we've got in order, the capability that we can take forward as a junior explorer. So Wellington, it's got 3 tenements. The nice thing about our portfolio in terms of de-risking is here's an old gold mine, here's a porphyry target, and here's maybe epithermal porphyry. They're actually separated nicely between tenements. So that gives us as a company an opportunity commercially, not just to rely upon one target. We can sell one, we can joint venture, we can do different things with our portfolio. But Rose Hill, and we spoke about those previous numbers for Newcrest, here's a drill hole of 71 metres at higher grade. Importantly, this is from surface, and we haven't even got there yet. But over here, which we can advance, is the historical gold mine, 230,000 ounces of 26 grams per tonne, high grade. We did an announcement a month ago on this. We'll be drilling in the next month here. Down south, this is where the historical gold mine, we'll be drilling down here, and the cover is 2 to 4 metres. So this gives us, and this is the one that we said the target's about 50 to 250,000 ounces. So these are targets that we can advance quickly and get to a resource and get to a mine and drive shareholder value. And the other ones have the potential for joint venturing. Mile, Goldfields only spent about $1 million on this project. It's a 400 square kilometre project. But what they did is they put only 5 holes down here, and they had 19 metres at 1.28. We put 30 and some RC holes down the road here and found 30 metres at 1.6. So we've predicted with Goldfields that this is a 15-kilometre gold trend. And it came out of our tenement, and so we actually added this other tenement as an extension. So this is something really easy for us to expand. We've just done an aromatic magnetic survey on this. We're waiting for interpretation, and the next thing we'll be doing would be doing some soil sampling and infill drilling to prove up the prospect. Mile, this is our monster or elephant in the room. Goldfields spent about, and with us, about $8 million on this project. But again, in terms of those lovely big intersections with strong copper and gold numbers, there is a gold target, a little bit like Cal. This is Bonanza gold, style half a metre at 204 grams per tonne. So it's an epithermal target. But this is a project that we're actively working with some of the world's big majors that we will joint venture to provide the upside on this project. That's the joint venture with the Japanese government. It is only 15 kilometres from North Parks, so it offers other strategic opportunities there. Recent drilling, that's near surface potential for open pit mining, and that's down here. The big porphyry work we're doing is up here. We've just done an aeromagnetic survey and identified 9 more porphyry targets and 3 more orogenic targets down there. So, big portfolio. I'm trying to talk a little bit fast because we're trying to cover a large portfolio. In Western Australia, which we're based, everyone in Western Australia thinks nothing east of the Nullarbor happens. So we wanted to have a little bit of West Australian flavour, and certainly Yamana is Australia's, so the Yilgarn is Australia's biggest and most exciting gold area. So we've recently added 2 new projects in. Right here, you heard me speak about the 6 million ounce Gruyere project that's being built, mines being built. We've added these 2 tenements and another one up here. So we're only 15 kilometres from Gruyere, and everything in yellow is Gold Road. So we call these target generation projects. You know, we'll advance them, move them on, but obviously there's some strategic opportunities for us to do with these 3 tenements there. and also the other project, which is called the Mount Venn project here. The Mount Venn project is a copper, nickel, cobalt. So from the previous presenters, electric vehicle type commodities. We own 60% of the Mount Venn igneous complex. Now, previous high percentage, high value rock chips historically. Some old drilling, but still some nice numbers in terms of the copper, nickel and cobalt. And most recently, a company called Great Boulder Resources, GBR, they own 40% of the igneous complex, the tail. They did 20 RC holes in November. They got those numbers, and since then, they've added about $13 million of market cap to their company. We own 60% of the igneous complex. So again, that's early stage, it's target generation, but it also offers us some other strategic investment opportunities. So, strategy, we are very, very focused on the near surface gold targets that a junior explorer can take ahead. And in winter, our winter, we will be, you can see in terms of our exploration, we'll be doing Badangra, Moorfield and Lady Ilsa in terms of drilling. And we'll do target generation at the two projects in Western Australia we spoke about. And we've got $1 million from our joint venture with the Japanese at our Parkes project. Looking at the 900 companies out there that in the marketplace, how do you compare? Well, what we say is that we can compare ourselves based upon location and targets. And Impact, who gave a great presentation this morning, what we're focusing on here was last year we listed, our market value was 16 million, today we're valued at 8. Impact is above their market value at 18. Staveley is it's a porphyry, there's chasing porphyries in Victoria. And they've gone with some good results, from 14 to 45 million. And Great Boulder Resources is that little tail on that West Australian project I spoke about. And since November, they've added $13 million in market value, in market cap. So we've got a large portfolio, but you also have to be able to advance it. So team. We've put together a fantastic team. Stephen Oxenberg did the transaction with me when I was negotiating with Goldfields. He was then Exploration Superintendent at St Ives, which is Goldfields' largest gold mine, 15 million ounces, and he had a $35 million exploration budget. Our principal geologist, Vladimir David, he did his PhD on our region in the East Lachlan and Cobar, and he was the team leader of the Hera discovery, which Aurelia Resources have done fantastically well out of. We have porphyry. Porphyry, important to understand porphyry. Malcolm Norris, he was country manager of Western Mining of the Philippines on their big Tampakan porphyry. He did other things with Intrepid in terms of Tujuh Bukit, Indonesia, which is one of the biggest deposits around there. And as the managing director of Sol Gold, which is very famous in the news area, he bought a project called Cascabel in Ecuador. And that's one of the biggest porphyry deposits in the world. So he sits as a non-executive director, but a great person to advise our board. So we've got a great support at the board level, but most importantly, our exploration and what's going into the ground is led by a fantastic team. We speak about doing joint ventures. So when you do a joint venture, you want to be operator. That means you get paid to do it and you can control it. And the reason I speak about our team, and we're already being operator for the Japanese, is our team is capable of actually doing a joint venture with a major, and we can still remain as operator. So, if I just return back there, so where we are, we've only got 92 million shares on issue. The top three shareholders, including Goldfields, own 68 million of the 92 million. They're all escrowed until next year, so it's very tightly capped. Demand and announcements will drive our share prices higher. And really, that's the pipeline that we have. What that shows you is the dark, bolded projects are our gold projects that we think can get to resource very quickly. The red are partnered projects that will move up the line, and the blue ones are the West Australian projects that we'll just use as project generation as we move forward. So thank you very much for your time. Our booth is just straight out the front of the door, and hopefully look forward to speaking to all of you, after at the next break. Thank you.
Thank you, David. Thank you so much. Put your hands together for David Richardson.